Let's talk money.
Hello and welcome to the second edition of Let's Talk Money in this new year 2025. Yes, the year is still new. And if you followed us last week, you would know that we are in a two-part special series which talks about the hottest mutual fund ideas that you can consider in the year 2025. We have, of course, two veterans of the mutual fund world with us because they've been looking at this industry and so many funds across many, many years. Feroze, Azeez of Anand, Rathi Private Wealth, as well as Kaustubh, Belapurkar of Morningstar. Gentlemen, thank you so much for staying on. Now, last week we had covered the basic framework of what we should look at before we decide to buy a fund, why it's not enough to just go by past performance. And of course, we covered the large cap category, the large cap fund ideas for 2025. So before we get to the other categories, Feroze, actually, I want to just spend a little more time recapping this framework that Kaustubh was also talking to us about. You tell us, what about you? I mean, apart from past performance, you folks also look at a whole host of other data points. But from a hygiene perspective, as investors, what all should we consider beyond past performance before deciding to buy a fund?
Mathematically, in Anand Rathi, we try and see lead indicators. We use something called regression, which is called statistical astrology, to find out what early signs does an underperformer give you, or what early signs does a performer give you. So there are 11 such variables. That's one thing, which are not available in the public domain. We try and find out if there are two funds, which we equally like. We try and find out the target NAV, like every stock has a target. A basket of stocks can also have a target. So we do that. But all said and done, this is information which your distributor can do for you, your advisor can do for you. And if you don't have one, I would seriously say, I can backtest Let's Talk Money's schemes. You just have to come to a platform like yours, because there are people coming and giving unbiased advice. Yeah. I'm not saying to flatter
That's what we
you,
strive for, absolutely.
Right? Because if you look at all the schemes recommended here from various experts, there is no commission being earned. There's no vested interest, so you're getting clean, pure, orderless data. So I think I would say that's the only way.
Thank you, Feroze. Thank you so much for the compliment. But that's what we really strive hard for on this show, to ask tough questions to our guests so that they come out with some of the best possible advice and answers so our viewers can take more informed decisions when it comes to their portfolios. So now let's straight away get down to action. Gentlemen, let's actually recap some of the highlights of the previous episode as well. You can, by the way, catch the previous episode on YouTube, where the overall fund selection framework is being discussed. We also went into details of the large cap fund ideas for 2025. So quick recap, and then we'll move forward. Feroze, just to recap the large cap category, and then we'll go on.
Recommended quant large cap.
Investors who want to go beyond and add a little bit of a mid-cap flavor also, they can take on some more risk. There is the large and mid-cap category. So let's start with some ideas here as well. Feroze, and also remind us of the mandate, right? These funds have to invest, at least 65% in large and mid-cap stocks?
So it's actually 35% each minimum in both large and mid. So that's the mandate. And I think the fund that we like, and it's actually the Mirai asset large and mid cap.
Okay.
Now this is a more 50-50 portfolio, and this might raise a little bit of eyebrows because I think the fund's been struggling a wee bit in the recent times, and I'm going to bring in my cricketing analogy that can also draw in a lot of debate, where we've had some of our stalwart batters probably not doing so well in Australia.
That will go into a different tangent, but yes.
I
get what you're
backing at. Because like we said, there are periods where a certain style for the fund manager may not be working. So it is. The proof they're putting is that they don't change course, right? They're doing the basics right. And I think in this case, obviously Nilesh is overseeing things, but Ankit is also kind of running, the mid-cap piece on that. And, they run a 50-50 mandate on this portfolio. And they're, more growth at reasonable price sort of investors. So they're looking at for good cash flow generating businesses. They're looking at the right price in terms of margin of safety into buying businesses. So, more bullish momentum market, the strategy might underperform like it has in the recent past, but we expect that, they'll come back up the curve.
This is Mirai. Yeah. We've got the large and mid category covered. Now, what we saw in 2024 was that investors are willing to give a lot of their money to fund managers with a very free mandate, leaving that decision with the fund manager, whether that money should be largely in mid caps or in small caps or in large caps. So we saw the flexi cap category turn out to be a very big draw in terms of just attracting a lot of the inflows in 2024. So let's talk about some of these categories as well, the flexi cap and maybe even the multi-cap category, where you can have, the portfolio can have stocks across different market capitalization as long as the outcome is great, because that's what we want as investors, right, Kaustubh? That, you decide large, mid or small, we just want good returns. What do you like here in this category?
If you look at the flexi cap, right, so a lot of managers would tend to, while it's a flexi mandate, I think there's, in a certain band, they would still have, what we call a large cap allocation in place. So, for instance, one of the strategies that we really like is the Kotak flexi cap, right? Now, Harsha, super experienced manager, great pool of analysts, kind of providing them with the research for that. And I think, he will tend to run about between 60 to 80% in large cap. So it is definitely a large cap bias portfolio. But I think Harsha is very clear in terms of his mandate of that, he would want to buy good quality businesses, low leverage businesses. And I think the strategy is done exceptionally well over a period of time. So I think that's a strategy that we really like on the flexi cap side.
Flexi cap. Okay, Feroze, same question and same category to you, because a lot of people, even people that I interact with, they have all understood that they don't want to take the headache. Let's leave it to the wisdom of the fund manager. Chota ho, bada ho, medium ho. We just want good returns. So flexi cap funds for 2025.
HDFC flexi cap would be my pick. We've always seen that Roshi Jain is the fund manager. We've always heard that large funds find it very difficult. But there is a study which corrects me. Very large funds find it easier to manage. There is very controversial, the study. So, of course, I would have said large funds.
On the large cap fund, you just said that since quant is a smaller, size scheme, you prefer that as a large cap fund, yeah.
See, sometimes in a mid-cap scheme, let's assume Chirag Setalwad has 2 lakh crores to manage. His NAV will become very buoyant because he's buying those same 50 stocks.
Yeah.
So he will re-rate them and hold them up eternally. That's the kind of size of money for an Indian low free float market. So coming back, HDFC Flexi Cap is my pick. It is large, irrespective of my me contradicting myself. I'm just trying to say in the HDFC Flexi Cap category, Roshi Jain has this capability of doing bottom-up stock picking and has proved that irrespective of size, you can make money. That's why. And if you, to save some time, on the large and mid-cap category, it'll be DSP Equity Opportunities. Rohit Singhania is the fund manager, and I like his capability to pick both large and mid.
So DSP for the large and mid-cap category for Feroze, and the HDFC Flexi Cap for the Flexi Cap category is what you're looking at. Got that? Now, the multi-cap category, I don't know if it makes sense at all, Feroze. Tell us about this, because the Flexi Cap at least allows you to mix and match as what you want. The ratio can be anything. But in multi-cap, it comes with its own mandate. I think it's 20, 25, 25, 25 in terms of, whether you can, how much of mid-cap, small cap and large cap you need to have. So does the multi-cap category make sense?
I think it makes perfect sense for me because, of course, theoretically, there is agility. What is the change in the large cap and mid cap and small cap allocation in flexi cap? If you look at this study, which we did, you'll be surprised that flexi, naam ka flexi. 2 साल पहले भी 65% large cap में था, आज भी वही है. What is the maximum and minimum on a monthly fact sheet basis? The volatility in the allocation is negligible.
Okay.
So it's like what you buy is what you will hold in terms of market cap allocation. So multi-cap gives a very, very important allocation to a retail investor.
It's a disciplined allocation, basically, to mid, small and large. It doesn't get skewed to any one particular segment. Got it, got it.
If you have 1,000 rupees, right, you're getting these 3 segments mandatorily.
Okay.
And that's very important. People, so I would say multi-cap category, definitely a yes.
And fund?
Invesco multi-cap.
Kaustubh, what about you? Your preference in this category?
Like the Nippon multi-cap. I think, obviously the multi-cap category, like Feroze rightly said, it's got that bucketed approach where you're getting exposure at least 25% to each of these segments, right? So for investors who are looking for that exposure, it's a good disciplined way of investing through a single strategy. And Nippon actually was a, while this category was created more recently over the last couple of years, the multi-cap fund from Nippon's actually been managed in this style for many, many years now. So Shailesh, who runs this fund, he is extremely active, benchmark agnostic in his style. And, he's got this knack of also picking up emerging themes, and sunrise sectors, which he's applied really well. So I think that's a strategy we like. Obviously, it tends to be a little more volatile than some of the peers, but that's I think they've also been working on their risk management in terms of position sizing and the way they would bucket stocks. I think the process is only strengthened over a period of time, which is something that we really appreciate, and I think that's a good strategy from our perspective to look at.
All right, gentlemen. Now, quickly, before we hit the break, let's move to the other hot categories that came out of 2024. Apart from thematic funds, sectoral funds, and of course, flexi cap funds, we know that there was a lot of demand for mid and small cap funds as well, because we Indians, we love our exposure to mid and small caps. So let's get to these categories. When we're talking about mid cap heroes for 2025, which are the funds that you will bet on?
Kotak Emerging Equity, it's been a part of our model portfolio. It did very bad last year. We were so tempted to get rid of it on the basis of recency bias and past performance. I continued, and that became the best part. To Kaustubh's point, if you buy past performance, and nobody would touch Kotak Emerging on 1st of April this year, out of my 14 schemes, this became the best scheme.
Oh.
And since we as a distributor were able to control the urge of not being recently biased, it still remains, and I think that after Pankaj has moved out in the asset management company, and Nilesh sir, who's actually the MD and also a fund manager of the past, has given personal attention to make sure that this flagship scheme remains where it's supposed to be, which is top quartile.
So Kotak Emerging Equity is Feroze's pick, and Kaustubh, yours?
The HDFC Midcap opportunities, which Chirag manages, and Feroze spoke about that. Yeah, so he manages both the mid and the small cap. So, I want to acknowledge, yes, size has become large, and there could be certain challenges. But what he has done, which is beautiful, is he stayed true to mandate, right? We've seen other funds probably going up the capitalization curve, because the most natural instinct is that if you have X amount of thousands of crores coming in, you'll probably start buying some large cap for liquidity. But this fund actually has amongst the lowest average market cap holdings within the peer group. So the fund has stayed true to label in terms of its mid cap.
So does it also make it more volatile then, because it's a true to label fund?
It could. It could, right? Because, it's pure exposures compared to someone holding maybe 15-20% in large cap, which probably be a little less volatile. That's what traditional thought process goes. But I think they've managed that really well. Obviously, the one thing I'd want to see that, how's the liquidity position, because, SEBI's also mandated that. And that becomes a little bit of a, thing that we'd want to watch for. But otherwise, I think extremely well-managed strategy. They're buying market leaders within that segment with very healthy cash flows. So I think that's, great process being run by a great manager.
All right. So viewers, there you have it. HDFC Midcap and the Kotak Emerging Equity are the two picks from our experts on the mid-cap side of the market. We need to take a very quick break. But if you have the appetite for risk, and if small caps are your playground, then we'll get you some small cap fund ideas for 2025 in just a minute.
Let's talk money.
Welcome back, viewers. This is Let's Talk Money, and we hope that you have been taking notes, because it's all about the top mutual funds that you can look at in the year 2025. Now, we have got lots of categories, and we've been asking both Feroze and Kaustubh for exact fund names. It's time to come down to the small cap category, which continues to dominate investors' mindset and attention as well. So, Kaustubh, small cap funds for 2025.
Small cap, by the definition, obviously you want exposure to, something that's high growth. And I think one of the funds I really like, again, it's an interesting pick because it's not done that well recently, is the SBI small cap. Now, it's managed by Srinivasan, who's super experienced manager, and he's got a very clear thought process about really buying, growth companies. And he runs a pretty concentrated, even from a small cap portfolio perspective, relative to a lot of the peers within that group. And again, it's true to label, right? So he is buying companies, and typically it's not a super diversified portfolio. So he's betting on his top picks, and he's buying into those sort of smaller cap names, which is a great sort of. So like I said, there's been some headwinds in terms of the growth style, but you would expect that a manager and a strategy like this will do very well, or over a longer time period, which is anyways required for a small cap strategy.
What about you? Small cap fund picks?
Invesco India small cap, HDFC small cap. Both of them are diametrically opposite in terms of size. One is a 5,000 crore, the other is a 33,000 crore fund. Both these fund managers have their own strengths. Tahir Badshah, who's the CIO managing the small cap fund. Of course, this has been a part of our portfolio about a year and a half back. It was a disastrous performance. when we picked it up. Of course, very difficult to buy bad past performance, but that's done beautifully, and that's now for the last 1 year has been the best part of our model portfolio.
All right, gentlemen, so that's the small cap category. But you know what? It's January, which means that all of us will be getting reminders from our payroll and HR teams in terms of tax saving and the proofs that we have to give. So if you're looking out for some ELSS equity-linked savings scheme ideas, basically the tax saving funds, let's ask our experts. Feroze, you go first.
SBI Long-Term Equity Fund is an equity-linked savings schemes, which I would definitely vouch for. The largest AMC is whom I'll give a lock-in to.
Got that. Kaustubh, your top ELSS picks.
So I'm going to make it very simple. So I'm going to go with the Kotak Tax Saver. Again, Harsha's fund run fairly similar to the manner in which he runs the Flexi Cap. So similar reasoning, I think extremely well-managed strategy across market capitalizations. And again, that's the one that I would pick.
Got that, Kaustubh. So we've pretty much covered all the large categories in terms of, large cap, mid cap, small cap, ELSS. Now let me throw in everything else when it comes to your mutual fund basket. As long as you're looking at the equity part of it. So whether it's global funds, international funds, sectoral funds, thematic funds, everything else beyond the 4 major categories that we have discussed. Feroze, any further picks?
SBI Infrastructure is there in my portfolio. I have not recommended a thematic scheme, barring this. After 13, 14 years, we've chosen this scheme in the thematic category because it's optically thematic, but it's more diversified in the thematic category, infrastructure. The one thing which stands out of this fund, for this fund, is the fund manager was an analyst of infrastructure. And he has seen the 2008. Bhavin, who's the fund manager of the scheme, has been an analyst for infrastructure. It's the best combo. Your analyst of that sector of 20 years experience becomes your fund manager. The
really
kind of microscopic worm view and a bird-eyes view, both will be there in Bhavin's.
Because this is one of the rare times that you have chosen to go out into the sectoral and thematic side, and you've liked a fund here. So let's see, hopefully it's going to work really well for investors as well. Kaustubh, let me ask you, any other fund choices, global, like I said, sectoral, thematic, anything else?
Yeah, I'll probably go with the global fund now, obviously with the caveat that they should be open for subscription given the ceilings that are there. But, maybe just a US index fund like a NASDAQ or S&P 500 to get in we talk about global diversification. I think that's a beautiful way of playing that. And, that's something I would advise investors to look at.
All right, gentlemen. So now it's almost down to rapid fire. So Feroze, let me come to you. The 1 or 2 fund managers that you will watch for this year, because maybe they're just star fund managers, are on an excellent track record, or maybe you expect them to come back from a rough patch. Who would they be? Okay.
SBI Contra, ICICI Dividend Yield, Mitul.
Okay.
These 2 fund managers.
These 2 fund managers. Mitul from ICICI.
Mathematically, they've added immense value by coming to work every day.
Okay. And Kaustubh, what about you? Any particular fund managers you'll look out for?
Yeah, so I actually named a couple of them. So I think the SBI, there are small caps, so obviously Vasan is one. And I think the other one, which we didn't talk about, but as a house, I think Bandhan. I think Manish Gunwani, he's added a lot of value in terms of strengthening the investment processes. So that's another house that I would watch out for the equity funds as they reshape the investing process. And I think a lot of the work has already been done. So that's probably another place I would watch out for.
Okay, gentlemen, this has been a power-packed punch. It's been interesting, the people, the teams, and the trends, the investing trends that we need to keep in mind as mutual fund investors in 2025. But before we go, viewers, and I don't know, maybe they say save the best for the last, Feroze has decided to come up with his list of the funds that you should definitely not have in your portfolio this year. The funds not to buy or not to have. Feroze, are you actually going to name some funds over here? This could be quite risky.
Funds, of course, this is, you might have friends in this list, being in the industry for about 20 odd years, but this is a mathematical no judgment list, right? What is the mathematics behind it? We've written some algos on different computer languages, which help you figure out if the fund manager were on a holiday and there was no active management for that scheme except the buying and selling resulting from net flows, what would be the actual NAV? That's the actual NAV is published. The hypothetical NAV is computed using those algorithms.
If the fund manager was on leave?
Leave. And he
so was not taking any additional decisions of selling or buying?
Absolutely. If the same static portfolio adjusted for inflows, outflows.
Okay.
If I do that, the worst for the last 3 years is Mr. Shiv Chanani from Baroda BNP Paribas Midcap Fund. If you have this fund, if he didn't come to work for the 3 successive years, the NAV would have been average 9% up.
Okay.
Give me some tolerance because you compute the net flow on a daily basis in this. So it could be 8 or 10, but it would be in the negative zone. So
Baroda, this is the...
Baroda BNP Paribas Midcap Fund.
Midcap fund. Okay, so red flag.
Red flag.
The
Now
other
let's
one?
go to the UTI Large and Midcap Fund.
Okay.
Srivatsa is the fund manager. If he didn't come to work for 3 years, average, the investor would be richer by 2.24%.
Okay.
Okay, again, I'm saying that this is backward computation. Some tolerance you will have to
Yeah.
allow me. I will go to the DSP focused fund. Vineet Samre, in this particular fund,
In the past, you really liked Vineet as a fund manager, right?
in the focused fund. See, Vineet as a fund manager in the mid and small cap space could have a different output. So
Sure,
this
sure.
is pure mathematics,
Yeah.
zero objective.
Sure, sure.
If I'm contradicting myself, I'm very happy to.
Sure.
Because if you have to be data backs, you have to be low ego.
Absolutely.
You can't say, "Ye maine keh diya," like Salman Khan, and you stick to it for the next 20 years, right? You have to be low ego if you have to be
Yeah,
mathematical.
yeah.
So DSP focused, Vineet Samre has destroyed 1.59 value per year
Okay.
for investors by coming to work for those particular 3 works. And then Mirai Asset Midcap Fund, Ankit Jain, has marginally been negative. 0.75 is the value or value destruction due to active management average.
This is Mirai Asset Multicap.
Midcap Fund.
Midcap.
Okay, very, very interesting. So, Feroze, thank you for that. So, the funds to watch, some of the red flags that you need to look out for, and of course, how we need to do our own homework and research, and then see if you want to take any alternate decisions with respect to maybe some of the funds that Feroze has just named. I must say, Feroze, this is quite brave. Compliments on that final list as well. Okay, gentlemen, before we go, some final advice for mutual fund investing in 2025. How to make sure that we have a wealthy and prosperous year with our mutual funds.
Firstly, listen to Surbhi and the show and the folks in CNBC. I think you guys are doing a great job.
Thank you.
I think for any investor, it's keeping your goals in mind, keeping it simple. Don't get swayed by external data or some trendy fund that may not be suitable for your portfolio. I think if you just have that goal in mind and you follow a plan, I think that's the best service that you can do to your portfolio.
All right, gentlemen, thank you so much for being with us at the start of this brand new year, for guiding us and for giving us very, very specific, actionable advice on what we can do with our mutual funds this year and what we should not be doing with our funds as well. Once again, wish you both a very, very happy 2025. Happy New Year to both of you. And once again, a very happy New Year to our viewers as well. See you again. We'll keep coming back to you with more advice, more wealth creation ideas for your portfolios through the year. See you again, same time, same place next week.
Let's talk money